All right, welcome back everybody to Altcoin Daily, where you subscribe for our daily videos on everything you want to know about Bitcoin, crypto on a daily basis. Today we are talking about different metrics in Bitcoin that, without a shadow of a doubt, indicate to me that way more people have been accumulating Bitcoin over the last 6 months, a year and a half than ever before. So we're going to be taking a look at new coin metrics information. I want to compare the Bitcoin rich list today to the Bitcoin rich list when I made a video 9 months ago at the bottom of the bear market. We're going to be taking a look at other kinds of metrics. This video today is going to be short, sweet, and to the point. Make sure you watch the whole thing. This is one you don't want to miss. And like always, guys, smash up that thumbs up, support the channel, and let's get into it. It is going to be a great year. Way more people have been accumulating Bitcoin than I thought was going on. So this information just came out on coinmetrics.com. It wasn't just about Bitcoin. It was about the whole crypto market in general. They put different coins, did all kinds of data analysis for it, but I want to focus on this one right here for now. The number of addresses holding at least 10 Bitcoins recently hit an all-time high. As of September 1st, there are now over 157,000 addresses holding at least 10 Bitcoin. So right now, 10 Bitcoins equals about $100,000, which is a lot of money. And you can see it hit an all-time high, this uptick right here. People who own 10 Bitcoins, or at least addresses that hold 10 Bitcoins. So there's a couple interesting things I want to point out. Number one, it seems like for the past basically 2 years, it's been hovering around only 150,000 addresses, but there's been an uptick as of late. And another thing that I think is very important that I want to highlight is that although it's way harder today to accumulate 10 Bitcoins, we're not at all-time highs, but we're very close to all-time highs, and it's never been harder to accumulate 10 Bitcoins today. Back when it was easy to accumulate 10 Bitcoins, much less people owned 10 Bitcoins. And really it's just for a whole host of reasons. It's awareness, it's on-ramps, it's all sorts of things. But take a look at this. When Bitcoin in 2010 was trading, it was a year old, it barely even had a value. Maybe it was trading at a cent or two around this time. Only about 50,000 people owned 10 Bitcoins when it was incredibly easy. Even in 2014, when you could buy 10 Bitcoins for, maybe a couple $1,000, depends when you bought it. Bitcoin was trading at only around a couple hundred. Only about 100,000 people own 10 Bitcoins. Today, all-time high for people who own 10 Bitcoins. And now I want to pivot over to the Bitcoin rich list, because what we're going to find is that whether it's a fraction of a Bitcoin, whether it's many Bitcoin, it seems like across the board, many people are accumulating. So we're going to compare the Bitcoin rich list today to a video of the Bitcoin where I showed the Bitcoin rich list about 9 months ago. It was December of 2018. This was the bottom of the bear market. It was shortly after Bitcoin capitulated. But let's take a look. Let's compare today versus 9 months ago. And what you're going to find is that almost across the board, accumulation has been happening. So for instance, let's start off with the metric we were just focusing on. People who own at least 10 Bitcoins. People who own 10 to 100 Bitcoins is 140,000 people today. Compared to 9 months ago, 10 to 100, 130,000 people. So 10,000 more people have accumulated between 10 and 100 Bitcoins. Let's go to the one below that, people who own between 1 and 10 Bitcoins. It is 615,000 today. Back in the day, it was only 547,000. So significantly more people own between 1 and 10 Bitcoins today. How about between 0.1 and 1 Bitcoins, people who are trying to get that 1 Bitcoin. Today, it is about 2 million, and back then it was only 1.7 million. I mean, you can take a look at all this yourself. It's basically across the board. These numbers are higher, except for the top two positions. People who own way too many Bitcoins, these two numbers have actually gone down slightly, which means that the network is just becoming more liquid, more more vast, more decentralized. Let's pivot over to here because it's not just accumulation that's been happening. There are a number of other metrics that are extremely bullish to me. And the first thing is this: Bitcoin's hash rate again has hit a new record. And I know what you're thinking. It was just yesterday or a week ago when I reported to you the same information. Well, guess what? Again, this number has grown and Bitcoin's hash rate has hit a new all-time high. So let's take a look at Bitcoin's just history of hash rate. And then in just a second, we're going to talk about, I keep seeing this post and the price is pretty much unchanged. Why is everybody so excited about hash rate? What's that about? We're going to answer that question in just a second. But I want you to see that back in 2000, back in the height when Bitcoin was $20,000, Bitcoin's hash rate was at an all-time high then as well. It's much less than what it is today. You could see throughout 2018, Bitcoin's hash rate grew and grew, except when Bitcoin capitulated and the hash rate kind of capitulated, the miners capitulated, then we got going again. And, I remember, actually, let's answer this question. So what does this mean? It means a couple things. We'll just go through some of these answers. Well, older ASIC miners are getting upgraded to more efficient, newer generations. Cheaper sources of power are being sourced, typically green, renewable power from sunk costs, and business processes are being streamlined. This all allows for hash rates to increase quicker than price. Some people say this is happening because of the hype of the halvening. What else? More hash rate, more secure. I mean, in essence, what this means is that more miners are deciding to mine Bitcoin because they want to make a profit, and that secures the network by far. This person says, because in the long run, all these miners have to pay bills. Now we went from 80 hash to 100 hash in like a week, so they don't have many bills to pay yet. But those machines are not free, and they have to be paid for, which means higher prices because they don't want to sell the reward coins for less. Really, no matter how you look at it, this is a long-term bullish indicator, in my opinion. Let's move on. When Apple is watching cryptocurrency, you know that it's gone mainstream. We're watching cryptocurrency. Jennifer Bailey, vice president of Apple Pay, recently told CNN's chief business correspondent, Christine Romans, at a private event in San Francisco, "We think it's interesting. We think it has interesting long-term potential." So this marks the very first time Bailey has acknowledged Apple's interest in cryptocurrency, although it's unclear what the company's intentions might be. The narrative is changing right before our eyes. Just 5 years ago, cryptocurrency bad, Bitcoin bad. Just 2 years ago, either no comment or lack of interest. Today, we're seeing all these big FANG companies show interest, which is incredibly interesting. Let's pivot for a second, because despite all this bullish news, despite the fact that the price hasn't changed that much, although we did have a little bit of an uptick, there's been a whale alert. Over 1 billion in Bitcoin transferred to an unknown wallet. So do you guys follow this? I follow a whale alert. Because everything is on the blockchain and we can tell when coins enter and leave wallets, although we don't know who is transferring money or to whom, we can see when large amounts are transferred. And 94,000 Bitcoin, over $1 billion in Bitcoin was transferred to an unknown wallet from an unknown wallet. And a silver lining is that the fee for transferring $1 billion in Bitcoin was a mere $10. But what does this all mean? Is this good? Is this bad? Well, we can only speculate as to what this means. One scenario could be that it's a whale that's transferring his Bitcoins to an exchange. If that's the case, then sooner or later we will see those coins hit an exchange wallet. If that happens, then chaos will ensue, because sending Bitcoin to an exchange would most likely mean you are selling or trading it. Another scenario could be a simple transfer between wallets. Given that a test deposit had been made prior, it's clear that this transfer was intended. It's definitely good to set an alert. If you wanted to set an alert on this address that has the billions in Bitcoin, You'll be able to see if any large transactions come out of it. I don't know exactly how to set the alert, but feel free to Google it. I mean, what does this mean? It means nothing. It means nothing until it means something. Let's move on. Did you see this? This was pretty funny to me. Mobius. Bitcoin is a cryptocurrency that really needs to be backed by gold to have any value, said famed investor Mark Mobius. So a famous investor who's not bullish on Bitcoin and not bullish on crypto was recently asked on CNBC on Squawk Box, what do you think of Bitcoin? What do you think of crypto? And his answer was basically, well, unless it's backed by gold, then I'm not interested. And then Joe on Squawk Box said, well, he said it was dangerous, doesn't have value. He said, well, fiat's not backed by gold. We still have value in it. Anyway, the point is this is nothing new, but the point is this. I wanted to show you this guy's answer to the question at the very end. I found this funny. We'll watch and discuss.
Risky situations. And by the way, I believe blockchain is a very high risk situation. A lot of people say, oh, blockchain can't be broken into. No, it can be. Anything that's created by man can be broken into, and it could create a big crisis. So I think we have to be very careful with blockchain.
We have to be very careful with blockchain. Watch out for the boogeyman, guys. Blockchain, the boogeyman, coming to get you. I thought that was funny. All right, let's move on. Let's talk about Bitcoin being a store of value. So the claim is that Bitcoin is a bad store of value. And usually the proof that people have to that claim is that, well, the 2018 bear market, aka I bought Bitcoin around $20,000. In 2018, it went to 3.2 in a year. It's a bad store of value. Now, if you've been subscribed to us for a while, you might have a more informed opinion on this. I think Bitcoin is, it's speculative, it's risky, but I think it could be one of the best stores of value. Anyway, let's take a look at this analysis and how this person's claim adds up. So upon analysis, we know that the average price, Bitcoin price in 2017 was $4,000. That's the average price in 2017. The all-time high was $20,000, but the average price was $4,000. Compared to the average price of Bitcoin in 2018, which was $7,500, compared to the current price of Bitcoin, $10,000-ish. The conclusion is this: the 2018 bear market makes Bitcoin look like a good store of value. And you can see another breakdown right here. This is something you already know. I wanted to show you another way to look at it. Finishing up this video, the birds are waking up. Birds are hungry. Bitcoin fixes this. See Mr. Dove, there's a finch. I've showed you this website before. Interactive bird feeder. Feed the birds using Nano, Bitcoin, Dogecoin, or Litecoin. I think a recent analysis showed that Nano was one of the most popular coins that people wanted to pay for birdseed, but all have been used. The birds are up. The birds are up. Just a few, probably by the time you see this video, the birds will be sleeping. Hey, birds sleep. Bitcoin never sleeps. And that's all she wrote. Great video today. My name is Aaron. I hope you got value. Leave a comment below about your thoughts on any of this, and I will see you tomorrow.